Let's bring on board Unmesh Sharma, who's the head of Institutional Equities at HCFC Securities, joining us this afternoon. Unmesh, great having you. How are you placing your bets in this market, and how are you viewing the market at this point? Give us a sense of what you're looking at in terms of where the market is headed maybe 3-6 months from now.
Thanks for having me on your show.
Great having you.
So it's been a very confusing market in the sense that there has been one major cross flow, which is that on the global front there has been selling, and on top of that, as people await the trade deal, there has been weakness in the currency. On the other hand, the domestic flows, including the data that was received yesterday, continue to remain very strong. As a result of this, what started to happen is that we've also seen that while the indexes are going up, if you look at portfolios, especially those in multi-cap or small and mid-cap, have actually taken a fair bit beating. So currently, what everyone wants to know is not just where the Nifty is going, but also whether there is whether the selling on that front will stop. So to answer that part in two parts. One is that if you look at headline Nifty, given the fact that despite the fall, it has been one of the worst performing global markets this year. Okay, at this point in time, in December, a lot of the FPIs do not take fresh bets, so we'll have to wait till January. But we recently visited the US, and what we found is that incrementally there doesn't seem to be that much interest in going further underweight on India. So, and that can show up a little bit, that has shown up a little bit on the awaiting of the selling as well. On the other hand, what's also happened is that the market's not really cheap. And as people start to look at what happens in the quarterly earnings, commentaries and outlook for the FY27, we will start to see the direction in the market. It looks like it will remain range bound with a clear bias towards large caps and only those small and mid caps where actually earnings delivery is certain. So next 3, 6, 12, 9 months, we expect to be extremely challenging. Our model portfolio has a strong bias towards large caps, has a strong bias on the mid caps, and very specific stocks, and to a large extent is domestic facing.
Okay. And Unmesh, so let's talk first about the global setup. Tariffs, you've got rate cuts across the world, and you've got a possible exposure to India, export-facing sectors, plus you've got a depreciating rupee. How do you play these 3-4 themes, which are more global-facing? IT, of course, is the one good way to play it, but at this point, is the risk-reward looking attractive there, or is there another way you play these themes?
So if you look at it from the index perspective, the big issue is that if you break down the earnings, the tariffs per se do not affect earnings as much because still dominated by domestic sectors. Having said that, that small component of IT and pharma to a large extent, which is driven by the foreign trends, is mostly indexed to the US. So from that perspective, it does make a difference. Now, in an environment where services have not been taxed and the H1B is really not such a big issue,
right?
And the depreciating rupee, the IT sector would have been an obvious one to bet on. The problem there is that
Unmesh, I have you on a bad feed, so I'm going to have to pause you there, and we'll come straight back. We'll try and repair that and come straight back to you for that answer. Kunal, within the IT pack, well, the move wasn't as pronounced as one would have expected. Largely, it seems that the IT pack had built in the 25 bips cut. So there was some zing initially, and thereafter we saw a very sharp cool off. And thereafter, the Nifty IT index has bounced back. Can we pull that up? And that'll give viewers a sense. Is IT looking ripe at this point? I know you're positive, but give us your top picks as well.
Yeah, so I think it's at current juncture, 1,000-point retracement from the last 3-day, 4-day swing high for the IT index. I think it's come back towards a good support point, support territory on the short-term charts. We've been discussing that a retracement of sorts for indices and larger cap names, which tend to go into a long rally mode whenever these stocks go into a correction, say a broad 3%, 5% correction on the short-term charts. That generally becomes a good territory where traders could look at maybe a buy and accumulate further for many of these names. In that sense, I would continue to be bullish on larger cap IT names prominently. So I think Infosys, TechM, something which I think on the charts still look fairly attractive on the short to medium term basis. Coforge, Persistent are the ones which look attractive on the medium term charts on the mid cap arena from the IT pack.
Interesting. Okay. What we'll do is slip into a very short break. We'll continue conversation on the other side of it. Stay with us.